Good evening, Doc Severson here for the Theo Night Report for a Thursday, November 10th. I'm going to start out tonight by looking at the S&P 500. This is just the SPDRs, which is the ETF for the S&P 500. And we're starting to see markets unglue themselves from this rotten little range that they've been stuck in for the last several months. So we're starting to see some things really move now and other things not so much. Now the S&P, I think, is getting very close to the point where it's going to have difficulty getting anywhere just because we're getting up to that magic 220 level or 2200 on the full S&Ps, as well as overhead resistance here. People are selling into this move right now, as we saw today. So let's look over at the 9 different sectors that the S&P has got and see what's really moving right now. So we'll start out with builders, and obviously builders are getting a nice move from this descending trend line here and heavy energy and a nice breakout from this. This is just perfect here. Now, this is too late to jump on because the price is already up to resistance, but this one is showing a very nice pattern. Still has got a nice uptrend, still has room to go, but I would wait until we get a little consolidation here before jumping on this one and maybe riding it up to recent resistance. So that's the builders. Energy maybe, and I say maybe, starting to move here. And energy has been just dead money for the better part of the last year now. The better part of the last year after, essentially we've gone nowhere other than the quick sell-off that we had beginning of this year, but we're right back up to that level again. So I think this does represent a pretty big potential here if we're going to see energy kind of break out from this level again. So watch for XLE to break above 72 to see whether or not it wants to go. Now, a big mover today was, over the last couple of days here, was the financials. So the financials were pretty much in just a triangle pattern here. So this is a big, ugly pattern that it's just been stuck in. And the reason for this is just the margins that the financials have. With those margins, with the interest rates so low, and all of a sudden, now we're starting to see perhaps interest rates break higher, maybe some inflation coming into play. This gives much more room for the financials to get somebody over. And right now is not the time to jump on this one because it's down in exhaustion right now, both the monthly and the weekly. So I would wait until this flags out for a few weeks here at this level. And then perhaps this is going to be a nice play that you could, or perhaps sell some puts against at the $20 level on the next pullback and ride this one for a while. The XLI was the big winner today. Again, industrial is coming across from this flag pattern here, big breakout, massive, and into all-time highs. And so this one is still, considering everything else, running at $600, $700, $800 a share, this is still relatively inexpensive. Now, technology was really, the XLK sector here was really the one that got punished the most, I think, because of the fact that the technology and some of the big tech stocks have been the big drivers of everything for a long time now, obviously. Just relentless growth to the upside. And this is an excellent place for profits to be taken, shed some capital, reinvest those into some of the infrastructure-based stocks like the XLI. Now, consumer staples, in this case, XLP, got pretty much drubbed today. So again, XLP has been one of these stocks that's really been driving things for a long time and hasn't broken trend yet, but this one could easily do so. When we have rallies like this that are this strong for this long, usually they have difficulty in the back end. Utilities has also been very strong. A lot of the reason for this has been the dividend that they paid, but nobody cares about the dividend right now as much as growth. And I'll get to that in a second when we get into small caps. Now, going to be interesting to see what happens with healthcare. Obviously, this one is going to be up for big time liability here, but exhaustion right now at the daily chart, this is probably going to flag out. This may just do nothing more than set up a lower high on here. So who knows what's going to happen with healthcare, but and here's this consumer discretionary. Consumer discretionary is actually still doing quite well because it's been consolidating for such a long time. consolidating up in this area, consolidating up in this area. Watch for this trend line to be broken. This one could have some run left in it. Now, I wanted to call your attention to the Russell because the Russell was really just a huge mover today, up almost 1.6%, and right up to that 1260 level again. So right up to that 1250, 1260 level again. Is this thing going to be able to hit 1300? Seems to have the power to do so. Probably not going to get there just immediately because we do have some exhaustion showing here. So when I say exhaustion, markets move from periods of range expansion to range contraction to range expansion to range contraction to range expansion, right? And they just keep doing this cycle over and over again. Right now we're in range expansion. That's going to lead to range contraction, wherever that leads to next. And we've seen the Russell kind of overshoot on some of these moves. So we could see this still continuing higher for next couple of days here. But after that, I think overhead supply is going to kick in here and profit taking is going to ensue on the Russell. So kind of in summary, this is really interesting because, everything has been just range bound. Everything's been range bound for the last several months, and we're just getting nowhere. We're fighting inside of this range. But finally, we're starting to see the log jam unglue itself, and we're starting to see capital moving around. We're starting to see capital moving out of some of the big tech and into some of the industrial, some of the infrastructure projects. Interest rates are starting to move. We saw the TLT definitely get hammered today, so that has the feeling that rates are going to be going up now and bonds are going to be going down. So this is, everything's starting to move again. And so this is going to, movement equals opportunity for all of us. So that's it for tonight's report. Thanks for listening, folks. And we'll see you with this weekend's report. Take care.